The market closed Tuesday with Opendoor giving back some of the strong gains we've seen over the past week. The stock finished the day down by about 16 cents, or 4.23%, closing at $3.62 per share. Now, on the surface, that might look like a disappointing result, but when you put it into context, it's more of a consolidation than a breakdown. The day started with a rocket launch out of the gates. Opendoor surged to $4.10 right after the opening bell. But as often happens after strong runs, that initial euphoria gave way to profit-taking. The stock quickly slid back into the 350 to 379 range, where it spent the majority of the session. That's actually encouraging in itself, because despite the pullback, the lower end of the range remained intact, and we saw support hold steady around the 350 to 360 level. That base is starting to harden, and when you're looking at a stock that's come off an explosive short-term rally, stability at support is exactly what you want to see. And to be fair, after the big moves in recent days, a modest cooldown was expected. Broader market sentiment has also cooled, with risk appetite fading somewhat as investors digest macroeconomic data and Federal Reserve commentary. Against that backdrop, Opendoor holding above support levels looks more like a healthy reset than a red flag. If anything, the fact that buyers were willing to step in around 350 to 360 tells us the crowd that has rallied around this stock is still there, still engaged, and still confident in the story. This is the kind of price action that can set up the next leg higher if momentum builds again later this week. But what really makes Opendoor one of the most fascinating stories in the market right now is not just the chart, it's the narrative unfolding around the company. Tuesday brought another wave of developments, both on social media and in the broader conversation about leadership, retail influence, and the future of real estate. At the center of it all is Eric Jackson. His role in shaping retail sentiment and articulating a vision for what Opendoor could become continues to grow. Earlier in the week, Jackson laid out his bold price target of $82 over the long term, envisioning Opendoor as something closer to the Airbnb of real estate than just another iBuyer. On Tuesday, though, he shifted his focus toward leadership. Specifically, he's begun publicly advocating for Travis Kalanick, the founder and former CEO of Uber, to take the helm at Opendoor. Whether this is a serious proposition or more of a thought-provoking suggestion, it highlights a desire among retail voices to see the company led by someone bold, disruptive, and deeply experienced in scaling platforms. Now, it's important to recognize that Kalanick hasn't responded, and there's no indication from the company that such a move is on the table. But the fact that retail investors and influential figures like Jackson are openly debating CEO candidates tells you just how engaged the community is. This isn't just passive speculation, it's an attempt to shape the direction of the company. That level of grassroots involvement is unusual in the stock market, and it shows how the balance of power is shifting in the era of social media. On the other side of that leadership question is Shrisha Radhakrishna, the interim CEO, who has been winning praise for his accessibility and work ethic. He's been consistently active in communicating with both retail investors and Opendoor clients, responding to suggestions, engaging with the crowd, and building a reputation as someone who listens. That's not just good PR, it's an important bridge. When a company is going through leadership transition, maintaining confidence is key, and Shrisha has become something of a stabilizing figure. Even if he doesn't ultimately become the permanent CEO, the way he's handling this moment is strengthening the trust between the company and its retail base. That theme of trust and collective action brings us to one of the most significant contributions to Tuesday's narrative. Anthony Pompliano, a well-known investor and commentator, posted a long note on social media that reframed what's happening with Opendoor. In his words, the people calling Opendoor a meme stock don't understand what's really going on. He argued that retail investors today function more like a hive mind, a decentralized hedge fund, as he put it. Everyone directs their own capital and makes their own decisions, but loosely collaborates to surface the best ideas, pressure companies where needed, and accelerate innovation. His point is that what we're seeing around Opendoor isn't just hype. It's coordinated energy. It's thousands of people identifying opportunities, providing direct product feedback, advocating for leadership changes, and pushing the company forward in ways traditional institutional investors simply don't. Pompliano highlighted the hundreds of product suggestions sent to Opendoor executives, the feedback on communications, and even the retail input on potential merger and acquisition opportunities. He noted that the resignation of the previous CEO was itself a direct response to retail pressure. And he made the case that this is just the beginning. Opendoor, he suggested, may be the first of many situations where retail can move faster, be more agile, and outthink traditional investors. That's a bold claim, but it resonates when you look at the last few weeks. The stock's explosive rally wasn't driven by a surprise earnings beat or a sudden analyst upgrade. It was fueled by retail coordination and a shared vision of what the company could become. If you step back and put this into context, Opendoor is not just trading as a real estate company anymore. It's trading as a case study in the new era of decentralized investing. The base narrative is still tied to fundamentals, housing market conditions, interest rate policy, and the company's pivot toward a lighter, platform-oriented business model. But layered on top of that is a second narrative, the power of collective retail action to accelerate change and create value. That's why the stock has become such a lightning rod. Some dismiss it as another meme stock. Others see it as the proof of concept for a new kind of investing community. From a fundamental perspective, the main catalysts remain unchanged. The real estate market is still struggling under the weight of high mortgage rates, but optimism is growing that the Federal Reserve may cut rates later this year, perhaps as early as September. Any relief in borrowing costs would be a tailwind for home sales and, by extension, Opendoor's business. The company's own strategic pivot, moving toward a less asset-heavy model that emphasizes partnerships, referrals, and platform development, is also aligned with the demands of both retail and institutional voices. Investors increasingly want to see Opendoor become a scalable marketplace rather than a capital-intensive house flipper. That's where Eric Jackson's long-term vision comes into play. His comparisons to Airbnb are not just rhetorical flourishes, they're an attempt to frame Opendoor as a technology company first and a real estate operator second. The more Opendoor can automate, leverage artificial intelligence, and streamline operations, the more it can resemble an Amazon or a Google of real estate. That's a narrative with far greater upside than simply being another cyclical housing play. And it's a narrative that seems to resonate deeply with retail investors who are looking for the next big platform story. Of course, challenges remain. The housing market recovery is still tentative. Institutional investors remain cautious. And leadership uncertainty is not something Wall Street typically rewards. But when you combine the resilience of support levels on the chart, the high energy engagement on social media, and the growing chorus of voices articulating long-term transformation, you get a stock that is as much about belief as it is about balance sheets. That belief, for now, remains strong. So as we head into the next trading session, the story is clear. Opendoor has cooled off after a hot run, but support held, and the base around 360 is intact. Eric Jackson is pushing bold ideas, from new leadership to new business models. Shrisha is building goodwill through engagement. Pompliano is reframing the narrative around retail power. And the broader market is waiting for signals on interest rates and housing demand. It's a complex picture, but it's one that keeps investors watching closely. Opendoor may not move in a straight line, but the direction of travel, toward becoming something much bigger than an iBuyer, remains the central theme. Whether it plays out as an Airbnb-style platform, an AI-driven real estate engine, or simply as the flagship stock for a new era of retail influence, the momentum behind the story is real. And that, more than any one day's price action, is what makes Opendoor the stock to watch.